Welcome to Study Loop.
You're given summary statistics for the weekly payroll of a small company. Do you think the distribution of salaries is symmetric, skewed to the left, skewed to the right? Explain why. Here I would say symmetric. And this is because the the mean and the median are the same. They're both 700. For part B, between what two values are the middle 50%? Well, the middle 50% is always between the first and third quartiles. And if we know that the first quartile is 450, and the interquartile range is 700, then we can add 700 to the 450 to get to the third quartile, which takes us to 1150. For C, suppose business has been good and the company gives every employee a $50 raise. Tell the new value of each summary statistic. Well, the minimum would be now from 400. Well, if the lowest salary was 350, that'll now go up to 400. The mean will go to 750. The median will shift to 750. The range will not change. There will still be $1,200 between the max and the min. The interquartile range will remain unchanged because that's a spread. But the first quartile will change. That will go from 450 to 500. And the standard deviation will change as well. That will go to 300. That will not change. I take that back because standard deviation is spread. That will stay at 250. For part D, instead, suppose the company gives each employee a 10% raise. Tell the new value of each summary statistic. Well, 10% of 350 is 35. And so that'll take us to 385 for the minimum. The mean, 10% of 700 is 70, so add that to it. You're at 770 for the mean, 770 for the median. The range will change as well. So if the range was 1200, it'll now be 1320. A percent will change that spread. It'll get larger. The interquartile range will also be affected. It was 700, so that'll go to 770. And the first quartile, if it was at the first quartile was at 450. So that will now go to 495. And the standard deviation was at 250. This will get affected as well to 275. So everything gets affected with a percent increase.